The trading day began quietly across Iraq, yet the movement of the US dollar quickly became the main conversation inside financial markets, exchange shops, and among ordinary citizens who closely follow currency prices every morning. Dealers arriving early to Baghdad and Harithia currency exchanges noticed from the opening moments that the American currency was slightly stronger than the previous session. The rate hovering around 153,000 Iraqi dinars per $100 did not represent a dramatic surge, but in Iraq, even a small fluctuation attracts attention because the dollar has become a daily indicator of economic stability, purchasing power, and public confidence. Currency traders described the atmosphere as cautious rather than panicked. Many had expected some movement after the previous day's closing rate of 152, 300 dinars per $100, and the opening at roughly 152, 700 signaled that demand remained firm. Exchange offices across Baghdad began adjusting their boards accordingly, with selling prices rising toward 153 to 250 dinars while buying prices hovered near to 150.50. Meanwhile, in Erbil, the Kurdistan region shows slightly narrower margins with 152,900 and buying at 152,800 dinars, the effect reflecting a more balanced flow of supply and demand in that market. Behind the numbers lies a deeper story. Iraq's currency market is extremely sensitive to policy decisions from the Central Bank of Iraq, the availability of dollars through official auctions and regional trade flows. When traders see even a modest upward movement in the dollar, they begin to interpret it as a signal. Some believe demand from importers is increasing, while others suspect that supply channels may be tightening again. In the last year, Iraqi authorities have attempted to stabilize the dinar by regulating how dollars are distributed to banks and businesses. The government's goal has been to reduce illegal transfers and align the official rate with the parallel market. However, the parallel market still reflects real demand in the street economy. Therefore, when the dollar ticks upward on Saturday morning, it often indicates pressures that have not yet fully appeared in official statistics. Market observers predict that if current conditions continue, the dollar may remain in a narrow upward trend during the coming week. The reason is not necessarily a crisis, but a seasonal pattern. Importers preparing shipments often purchase foreign currency ahead of Ramadan and upcoming trade cycles. Iraqi merchants importing food, electronics, and construction materials typically secure dollars early, especially when they fear future restrictions or shipping delays. Several traders in Baghdad suggested that the rise could be temporary. They noted that the central bank still holds significant foreign reserves, more revenues, and has demonstrated in the past its ability to intervene when the dinar weakens beyond acceptable levels. If authorities increase dollar injections into the banking system, the rate could easily return to the 152,000 range or even slightly lower. However, another group of analysts believes the increase may signal a broader trend rather than a short-term fluctuation. They point to regional financial conditions. Oil prices remain relatively stable but uncertain, and global currency markets are experiencing volatility due to shifting interest rate expectations in the United States. Yet, when US interest rates remain high, hold interactive internationally, which indirectly affects Iraq because the country depends heavily on dollar transactions for imports and government payments. In Iraqi daily life, the exchange rate is more than a financial statistic. Many salaries, especially in private sectors, are tied in directly to the dollar. Imported goods dominate markets. From household appliances to medicine and even certain food products. As a result, a change of only a few hundred dinars per $100 can gradually influence retail prices. Shop owners in Baghdad's commercial districts often adjust within days, not weeks, after exchange fluctuations. Residents expressed mixed reactions. Some shoppers said they were worried the increase could raise prices of basic goods again, particularly cooking oil, rice, and imported packaged foods. Others were less concerned, noting that the difference remained small and could reverse quickly if the government intervenes. In Erbil, the mood appeared calmer. Currency exchange operators there reported steady activity, but no surge in panic buying. The narrow buying and selling spread suggested confidence that the rate would remain stable. Kurdish region traders have historically benefited from diversified trade channels with Turkey and neighboring markets, which sometimes cushion currency pressures experienced in Baghdad. Economists following Iraq's monetary policy emphasize that the country's dependence on oil exports plays a central role in the exchange rate. Since oil is priced in dollars, government revenue arrives in foreign currency, and the central bank converts part of it into dinars to pay salaries and public expenses. When oil exports flow smoothly, the dollar supply increases and the dinar stabilizes. But when bureaucratic delays, sanctions, compliance checks, or banking restrictions slow the transfer of funds, the local market feels the pressure almost immediately. Another important factor influencing expectations is banking reform. Iraq has been working to modernize its financial system and comply with international anti-money laundering regulations. Includes stricter monitoring of international transfers. While they strengthen transparency, they also temporarily reduce access to dollars for certain traders who previously relied on informal channels. This structural change has repeatedly caused small upward moves in the parallel exchange rate, similar to the one observed today. Looking ahead, predictions vary. If the central bank increases supply early in the week, analysts believe the rate could settle back near 152, 400 dinars per $100. But if demand continues to rise and supply remains steady, the rate might test 150, 500 or slightly higher. Such a move would still be considered moderate rather than alarming, yet psychologically significant. International factors could also influence the direction. Any strengthening of the US dollar globally tends to transmit into Iraq's market. Recently, investors worldwide have been closely watching economic indicators in the United States. Prefecta. Strong employment or inflation data generally supports the dollar internationally, and Iraq's parallel market reacts accordingly because traders compare domestic supply with global dollar value. There is a fact factor, there is also a behavioral component. When people expect the dollar to rise, some individuals convert their savings into dollars, increasing demand and pushing the rate higher. Conversely, prefecta. If they believe the government will intervene, they sell dollars, strengthening the dinar. Therefore, expectations themselves can shape market reality. Exchange dealers in Baghdad noted increased inquiries from small business owners rather than large investors. This suggests precautionary behavior rather than speculation. Where businesses that rely on imports often hedge against potential price increases by buying dollars in advance. Even small restaurant owners and electronic sellers monitor exchange rates daily because their profit margins depend heavily on currency stability. The government is likely monitoring the situation carefully. In previous similar scenarios, authorities responded through three main tools: increasing dollar auctions, coordinating with banks to facilitate legitimate transfers, and reassuring the public through statements. Communication alone sometimes stabilizes the market because confidence is a powerful economic force. Some analysts predict that authorities may soon issue guidance emphasizing that reserves remain strong and supply is sufficient. Prefecta, Iraq's foreign reserves are considered substantial compared to many regional economies, giving policymakers room to act. If such reassurance appears, prefecta, it could prevent speculative buying and keep the exchange rate within a manageable band. Another dimension involves cross-border trade. Iraq imports a significant volume of goods from neighboring countries, especially Turkey and Iran. Payments for these goods often require dollars or dollar-linked arrangements. Any changes in border activity, transportation costs, or regional politics can indirectly affect currency demand. The traders anticipate that upcomingly raised demand, explaining the current uptick. The difference between Baghdad and Erbil rates also offers clues. The slightly lower selling price in Erbil indicates either greater dollar availability or lower demand pressure. Some economists interpret this as evidence that the overall national market is not under severe stress. Instead, prefecta, the fluctuation appears localized and moderate. In the coming days, market watchers will focus on three signals: volume of central bank dollar sales, oil export revenue flows, and retail market prices. If food and consumer goods remain stable, confidence will hold. If prices begin to rise noticeably, public demand for dollars may increase further. For now, a decrease from 150 to 300 to around 150 to 700 dinars per $100 represents a cautious shift rather than a major development. Yet in Iraq's economic environment, small signals carry large meaning. The exchange rate functions almost like a daily barometer of trust between the public, banks, and the government. Citizens often wake up, check the rate on phones or through exchange shop boards, and interpret it as a sign of economic direction. A stable or slightly declining dollar brings reassurance. A rising one brings concern but also anticipation of government action. Predictions suggest the next week will be decisive. Prefecta, if supply measures appear, the market could stabilize quickly. If not, gradual upward pressure may continue but likely within a limited range rather than a sharp spike. Most analysts agree that a dramatic surge is unlikely because Iraq's reserves and oil revenues provide a strong foundation. Therefore, the current situation is best understood as a routine fluctuation influenced by seasonal demand, prefecta, global dollar strength, and ongoing financial reforms. The market reaction remains measured and traders are watching carefully rather than reacting emotionally. In practical terms, everyday life will not change immediately. Prices in local markets adjust slowly and wages are not instantly affected. However, sustained movement over several weeks could influence purchasing power. That is why the exchange rate remains one of the most closely watched indicators in Iraq's economy. As Saturday trading continues, the dollar's slight rise has become the day's main financial story, but not yet a crisis. De facto, it is a reminder of how interconnected Iraq's domestic economy is with global currency movements and internal policy decisions. Observers expect active monitoring by authorities and cautious behavior by traders. If stability measures appear soon, the dinar may regain some strength. If pressures persist, the market may gradually move higher but still within a controlled band. Either way, prefecta, the coming days will reveal whether the current rise is merely a brief adjustment or the beginning of a longer trend.